going on, Patreon? Welcome back to another post-market analysis, and today we're going to be going over the trade that we took this morning, right? So this morning here on the S&P 500, we're anticipating a Thursday reversal, right? Because if we know, let me show you guys here on the S&P, right? We're anticipating a Thursday reversal. Um, if we seen price action actually drop below these support levels, right? We had this bullish order block, then we had this lower time frame H1 order block, right? If we could see price action break below these levels, we want to see some type of continuation to the downside for a Thursday reversal. Because if you guys know, Thursdays, right, are known for reversals, right? So if we've been going higher all week, if we can get some type of break lower, we could see a Thursday reversal, and then potentially the next day, like Friday, we could then see that continuation move to the upside, right? So, right, we were also anticipating if we didn't get a drop below this key level, these order block levels, and we continue going higher. So let's say Thursday continued going higher, then tomorrow, Friday, we would get a TGIF. Thank God it's Friday, where if we've been going higher all week, then most likely that Friday will be then a short move, right? So we're anticipating either a Thursday reversal or a TGIF based off of how price reacted at this key level, right? If we broke below this key level, we will then anticipate a Thursday reversal. And coming into the marketplace here, right? We had news at 8:30, a lot of news at 8:30, and nothing happened. Nothing happened. Really, I mean, we had a 13-point move, but nothing really happened, and it wasn't until an hour later did we see the marketplace overall just dump lower over 30 points, right? Over 30 points in about the span of, yeah, in about the span of 10 minutes, right? In 10 minutes, we saw the market dump over 30 points on the S&P 500, more than 150 on the not S&P, but the Nasdaq, and over 250 on the Dow Jones, right? When we get a big move like that, where it's one-sided, right? When we get a big move like that, where it's one-sided, most likely, most of the time, what happens after we get a big move like that is consolidation, right? This is where we enter a high resistance liquidity run, which if you guys don't know what a high resistance liquidity run is let's say there's a short, right? We go lower and there's a fair value gap, right? There's a fair value gap. In a low resistance liquidity run, price action comes to this fair value gap and then drops lower. That's what we expect, right? But in a high resistance liquidity run, price action will come to this fair value gap, it'll drop lower, it'll come back higher, it'll drop lower. It'll essentially play around for a while before then finally going lower. So this is a high resistance liquidity run, right? And this happens almost every single time we get a big, massive move like this, right? So coming into the marketplace here, we did take a short here at this fair value gap, which I will say was not the right trade idea. Obviously, when I tell you guys, if you guys watched the fair value gap masterclass, if we have two fair value gaps like this, one up here, right, we have this SIBI, right, massive fair value gap, SIBI, and then we have this fair value gap below it, right? If we have two fair value gaps like this, right, make sure you guys are getting at the fair value gap above, right? Make sure you guys are getting into the fair value gap above. Do not pay attention to this lower fair value gap, because this is what happens. Price completely neglects this lower fair value gap and comes up into this fair value gap, right? So, no, that was more so a mistake on our end, right? Taking a trade off of this fair value gap rather than waiting for price action to get up into this fair value gap. But what we did do right today was we had a bigger stop loss, right? And it's important that you guys don't have the same stop loss every single time. So when volatility enters the marketplace, right, after we get this massive move lower, right, the market is very volatile, very, very volatile. When the market is in volatility, you cannot have the same stop loss that you had yesterday. So what I do is I go down, I lower my risk, right? I lower my risk so I can have a bigger stop loss. And this is exactly what I did. I entered off right here and I had a bigger stop loss. I had a much bigger stop loss. Um, yeah, I had a much bigger stop loss. I think it was like right here actually. I had a much bigger stop loss because I understood that the market was very volatile and just to be safe, right? Because you never know how harsh price is gonna retrace in volatile conditions. So it's important that you guys obviously have a safe stop loss to take into factor the change in market conditions, right? The market is always changing, and your job as a trader is to be a critical thinker, right? Your job as a trader is to adapt, right? If you see the volatility in the marketplace is going higher, you want to lower your risk and have a wider stop loss so you can take into account the added volatility. And that's exactly what we did this morning, right? So we took this short, right, targeting these lows, and as price action came up here, which if we go from high to low, that 25% level, right? Price action comes into the 25% level here. And then soon after tapping into the 25% level, we then see this drop lower. And what I actually did here was I actually scaled into my position and it brought my risk to like right here. So I actually scaled in my position here with my stop loss. Let me remove this with my stop loss above this high, right? Anticipating price action, right? After price action came up into this fair value gap, which is this M15 fair value gap, I was anticipating after coming up into this M15 fair value gap, right? 25% level after coming up here and then rejecting, right? I can be confident in my stop loss being up here, right? Because as price, so let me guys show you a depiction, right? So, right. So if I enter my trade here, right, with a stop loss up here, as price action, right? So let's say this is a fair value gap, right? So boom, price. So I enter my trade right here. Price taps into that fair value gap, and then we see the drop lower. I can now scale into my position and then move my stop loss above that high that tapped into the fair value gap, right? And just like so, right? So this is a way of how I scale into my positions, and this is exactly what I did. And I'm gonna be honest with you, right? We shared this in the live trading, and this ended up being a winning trade, right? Obviously, this took over uh 3 hours, but it ended up being a winning trade. And where I messed up today was even though I had a winning trade, like this was a winning trade, I messed up, right? I messed up, mentally, right? Because um as price action came low, so what I was anticipating was price action to come up into this right fair value gap, come up into it again, right? And then I wanted to see overall, I wanted to see a drop. I wanted to see a harsh drop lower after tapping into that fair value gap, right? That's what I wanted to see. I didn't want to see the market consolidate and then move back and forth. That's not what I want to see. I want to see when price action comes up into a fair value gap, right? I want to see the market drop, right? Exactly what happened here. So I wanted to see the market drop, and when I didn't see the market drop and the market simply just consolidated back and forth and back and forth and back and forth, I made the mistake of reversing my position because um overall this week has been a tough week, right? As we can see yesterday, we seen that drop lower and then we reversed higher. If we even look at Tuesday, we seen the drop lower and then we reversed higher, and then Wednesday we seen the drop lower and we reversed higher, right? So overall, this week has been a consolidated week. This week has been a seek and destroy week. A lot of reversals, a lot of consolidations, a lot of back and forth choppy price action, and not trading for a week, right? Yesterday was my first day back trading, after a week because, PC issues and stuff like that. Um, I'm still not 100% there mentally yet in terms of the discipline. So this loss was 100% on me, right? What happened was as price action was coming up, I got fearful. I got fearful as a trader, right? I'm, no matter how good of a trader you become, right? Psychology is always going to play a role, right? Psychology will always play a role in you as a trader, right? These are things that you can't escape as a trader, and especially during hard times, right? During hard market conditions, you're more susceptible to straying away from your plan, and that's exactly what happens, right? This week's market conditions has been very tough. It's been very tough, and that's caused me to stray away from my plan this morning of of holding on to my trade, right? Because remember, like I had the short with the stop loss up here, anticipating price action to not take out these highs, right? After tapping into this fair value gap and then leaving it and then scaling in, like price action should not come back up here to take out these highs. I had a stop loss up here. So I'm not sure why I took that stop loss off. So not I took the stop loss off, but I reversed my position, right? This was a good trade idea. I just wanted to see it play out in my favor quickly. And when it was consolidating and when it was wicking around and when it was just overall choppy and messing up, I became fearful. And that's why psychology is so important as a trader. And that's why it will forever be something that you will build as a trader, right? A strategy is as simple as, right? A strategy is as simple as, finding your edge in the markets, right? Finding your edge in the markets. The rest is psychology. The rest is psychology, and this is a proven lesson as to why psychology matters and as to why sticking to your plan matters. This is why it's important to stick to your plan. If I simply stuck to my plan and left my stop loss at that highs, it would have never took me out and this would have been a winning trade. But it's the fact that I allowed price action to come back up against me and then having prior days, right? Like throughout the week, we've been reversing and it's been consolidating and it's been choppy, right? Having those experiences, right, in the prior week, right? So that caused me to take this trade off early, right? As well as not trading for a week. So a lot of things play into trading, right? It's more than just trading a strategy. That's why if you want to be a good trader, you have to be, disciplined inside and even outside of the charts, right? Because if you're not disciplined outside of the charts, right, in your day-to-day life, you're not going to be disciplined when you come to the markets. You're not going to follow your rules when you come to the markets. And that's facts, right? I've noticed when I'm not disciplined outside of my life from trading, that correlates to my trading and I trade poorly, right? So as the market came back up higher and NASDAQ was not pushing lower, right? So this morning we were seeing NASDAQ, right? We were seeing NASDAQ finding support here, right? So NASDAQ was not pushing lower. It was going back and forth and back and forth and back and forth. And that made us fearful. I'm not going to lie to you. Like that made us fearful, right? Seeing that NASDAQ was not pushing lower and it was kind of consolidating and it was wicking around. It made me fearful and I reversed my position. Instead of waiting for this candle to close, I 100% just reversed my position at these highs, stop loss down here, and I eventually got stopped out and I walked away for a day. So So those were the trades that I took today, right? One trade, it was a winning trade, but not, you know, choppy market conditions, high resistance, liquidity run conditions, just overall choppy conditions, not clean, back and forth, as well as when we have big moves like this, it's a lot tougher to trade, right? It's a lot tougher to trade after we get such a massive move lower. It's a lot tougher to trade because of the consolidation. So during hard times when the market is tougher, I am more susceptible um to straying away from my trading plan, and that's real because guess what? We're human, right? When times get tough, it becomes harder to stick to something, right? It becomes a lot harder to stick to something when times get tough, right? When the market is consolidating and the market is choppy, it's going to be a lot tougher to stick to your trading plan compared to when the market's moving in your favors, the market's clean, the market's doing what you wanted to do. It's going to be a lot tougher trading when the market's in choppy conditions. And that's just why trading discipline exists, right? Trading discipline is sticking to your rules and sticking to your setup, right? Trading discipline is not taking my trade off, right? Allowing price to stop me out, right? So something that I've been trying to work on is cutting my losses early to minimize my risk, but at the same time, this is where it can hurt me because I tried cutting my loss early here, and it didn't benefit me, right? So it's a double-edged sword, and how I've actually combated this was moving my stop loss itself, right? Based off of price action rather than having it as a point value. So if the market's volatile and I need a bigger stop loss, um, I'll use a much bigger stop loss, and lower my risk, right? So I'll have a bigger stop loss. But if the market's not as volatile, then I'll use more risk and lower my stop loss and base my stop loss based off of price action, right? Basis off of price action. So this is what I'm trying to get back into is instead of manually cutting the trade off early, I'll have my stop loss predisposed before I enter the trade based off of price action itself rather than having a 5 point stop loss or a 7 point stop loss or how many point stop loss every single time, right? So sometimes I might have a 2 point stop loss, sometimes I might have a 10 point stop loss, sometimes I might have a 6.50, right? I'm starting to base it off of price action rather than manually cutting the trade off, right? So that's what I'm um formulating, and what I'm starting to implement. But today, I mean, even though it was choppy, it still moved, right? The move still happened, even though it took a lot longer. The move still happened, and it's unfortunate that we weren't able to capitalize on this move because I called this move out. I talked about it. We waited for the move to happen. It happened, but seeing price action come back against me, it made me fearful, and I made the mistake of reversing my position, thinking it was gonna reverse, and I was offsides, only to be found that I was onsides the entire time, and I reversed my position based off of fear. And it happens, like it happens. But guess what? Like I used less risk today. I used less risk today because I understand that the market was gonna be volatile. So I was not coming into the market today with a lot of risk or my usual risk. I used a lot less risk today, meaning today I simply just lost 1 R. Simply just lost 1 R. You know what I mean? So compared to the person who may have went full risk, they would have lost, they would probably blown their account today, right? Trying to trade this back and forth, back and forth, back and forth, this can really mess with your head. This can really mess with your head, and it can really cause you to go off course, right? And this is why it's important to set rules in place, right? 1 to 2 trades a day, right? And what I'm starting to do now is when I set my stop loss and when I set my TP, I don't touch it, right? So literally like handcuffing myself, right? When I set a trade, I don't touch it, right? So it's setting these rules in place to to essentially force yourself as a trader to not go off rails because during hard market conditions, because this is a hard week. Like look at yesterday. CPI, like look at this, right? Even Monday, like this was a hard week. This was not an easy week by any means. And it's during these weeks where you can lose a lot. And this is the difference between the good trader and the poor trader, right? Because no matter how you look at it, everyone has losing weeks, everyone has losing days. This isn't a signal service. I'm not here to give you guys winning trades every single day and tell you guys I'm a ultra millionaire trader. This is a real mentorship where you guys are learning to become the best traders, like become the best traders that you can be and actually learn, right? Too many people out there are selling you guys signals and courses on how to have 100% win rate and win every single day, and they're not teaching guys the reality of trading. The reality of trading is you're going to take losses, you're going to have losing days, you're going to have losing weeks, and it's about learning from them. Don't look at losses as a loss. Look at them as an opportunity to learn, to become better. Because you're going to reach a point in your trading career where you're going to be making so much money that this shit don't even matter. Oh, I just lost $10,000 today. And the next day you just made 100K. Oh shit, that 10K loss didn't mean shit. You know what I mean? Like you're going to be in that position in the future as a trader as long as you continue to build yourself up, right? Continue to build your mindset up. Continue to build yourself to where you need to be. That example was a little crazy. Losing 10K but making 100K, that's a little crazy, but still, like you guys get to where I mean, right? Right, this isn't a signal service. I'm not telling you guys to follow my trades and, you know, I win every single day or I win every single week. I'm showing you guys the process of what it means to be a trader and how to actually do this shit the right way because too many people are teaching you guys trading the wrong way, right? Trading is simply having an edge, which I've shown you guys in the mentorship, creating a plan, right? Which we talk about, right? Creating your game plan, creating your trading plan, creating your rules, right? Mechanical rules, creating your rules, right? Not trading every single day. Understand not every single day is a trading opportunity. Less is more. The less you can show up to these markets and and try to make money every single day, the more peace of mind in your life, the more money that you end up making, even, right? The less you can focus on these charts and not focus on these charts, but try to trade every single day, right? The better you're gonna look for high quality opportunities rather than trying to take every single opportunity that you see, right? Less is more in trading, right? Less is a lot more in trading, 10 times more, right? Right? And it's creating that it's finding that edge, right? Creating those rules. Understand not every single day is a trading day, and then and then And then every single day that, and not every day, but every time you show up to the charts, you follow those plans, you follow those rules. And there's gonna be days like these where you may not follow those rules. There's gonna be days like these. Of course, we're human. Like I wish I was a robot and I didn't have emotion and I just stuck to my trading plan every single day and I talk like this. Like you know what I mean? Like I wish, but we're human. But when you do get off course from your rules, which in this scenario was me not sticking to my plan. I had a stop loss in place. I had a take profit in place. All I had to do was just set and forget. All I had to do was just forget about it, and this would have won. But instead, I gained fearful when price action came back against me, and I reversed my position and ended up taking another loss. Right? That fear, that fear creeped in. If I simply just let it go and didn't think about it, that fear wouldn't have been there. So, and I'm usually good at that, right? I'm usually good at letting my trades run for hours and having that disciplined mindset. But because I haven't been at the charts for over a week, that discipline kind of starts to go away, right? Discipline is a tool, right? That you can I've seen a podcast. Discipline is a tool that can that's not there forever, right? It's not there forever. It's not there every single day. You have to constantly be working on it. It's a literal muscle. Discipline and willpower is a literal muscle that you have to constantly be working on, or that muscle will actually get smaller. So when you're not being disciplined in your day to day and in your trading, that discipline can actually affect you in trading. So me not trading for a week, right? Coming to the markets today, and yesterday, yeah, yesterday was all right, but today especially, that discipline muscle had went lower, was smaller than it was last week or the week before. So now me going over the markets, me learning from my mistakes, me practicing that discipline, me going to the gym today, that's building that discipline muscle up again and again and again, right? That like discipline is literally a muscle in your neural cortex, something it's like called like neural cortex. There was a podcast on it, but it's literally a muscle that you have to build every single day. And when you're not building that muscle and you start to get lazy and you're not um and when you're not building that muscle itself, it actually gets smaller and it's going to be a lot harder. It's going to be a lot harder. And you can see it right here because I've been in positions where I've held trades for over 5 hours, right? When I was consistently showing up to the markets every single day, right? I've had positions where price action almost stopped me out by one tick and it never stops me out and goes to my TP, right? Because I was building that discipline muscle. But the moment that I don't trade for a week and I come back to the markets, price action comes back on me just a tad bit and I get out of my trade when I'm known for holding trades for hours, right? Like this isn't me. You see what I mean? So it's getting back into the rhythm, right? Learning from your mistakes, learning from your losses, and then improving, right? You never truly master you never truly master this, right? It's just constant improvement, constant tweaks, constant, okay, I did this wrong, I'm gonna do this different, right? Okay, I did this right, I need to do more of this. I need to do more of this, right? Me adjusting my stop loss, right? Me lowering my risk to adjust my stop loss was from the past of me actually taking losses because I had the same stop loss. So I then adjusted my stop loss and lowered my risk and I started winning because of it. So I won because of that, so I did more of it. And now it's one of my rules that I do. right? Before I get into any single trade, determine my I have to predetermine my stop loss and my take profit, and based off of that, I have to adjust whether I use more risk or less risk, right? So overall, right, finding your edge in the marketplace, right, through strategies, right, my MMXM model, my indexes model, right, order block theory, however, right, it's all the same thing, right? Taking trades based off of fair value gaps or order blocks for a continuation move to the opposing liquidity pool or inefficiency, right? The market seeks two things: liquidity and inefficiency. If you can get inside either a fair value gap or an order block targeting that, that's all the strategy you need, right? And then it's setting rules behind it, following those rules, right? Understand not every single day is a trading day. Not every single day is a trading day. Um, right? Not every single day is a trading day, and understanding that the best opportunities come when you're patient and wait for those setups, wait for those opportunities, right? And then showing up, right? Showing up, right? Every single day, right? Showing up, doing your pre-market planning, doing your post-market planning, back testing, right? Trading, whether you're trading, well, however you're trading, tape reading, just showing up, looking at the charts, exposing yourself to the charts, and building that discipline. And when you build that discipline, it's much easier to stick to your plan. It's much easier to stick to those rules and much easier um, to actually follow those rules and follow those plans as you then come into the marketplace. So that was going over today's loss. Even though we did lose yesterday, we did cut our loss super early yesterday, like super short, and yesterday kind of just consolidated. Even though we did take a loss today and yesterday, we're only down 1.2 R, 1.2%. I mean, we're only down 1.2%. Win-win without even a scaling, just one win itself is 1%. A win with a scaling is 2%. Right? Or 1.5% actually. So even though we lost yesterday and today, all it takes is one win, right, to get us back to break even. That's it. And that's the difference between, a good trader and a poor trader, right? A good trader understands, right, understands the power of risk management, right? Because at the end of the day, um, this is more so, I wouldn't say gambling, but it's educated gambling, right? Because at the end of the day, you're not in control, right? The market is the house. They control the marketplace, right? They control the marketplace. Anything can happen. At the end of the day, it's a game of probabilities. It's a game of probabilities. Like there's gonna be days like these where it just chops around. It just chops around. There's gonna be days like these, and those are the probabilities where you're more susceptible to losing. You can't win every single day. You can't win every single trade. These are the days where you're susceptible to losing. It's almost a guarantee that you'll lose during these days. They want you to lose during these days because that's what makes it that's what makes it a probability. That's what makes the probabilities. They want you to lose. They want you to lose, right? Because at the end of the day, the house runs the market. The house is the bank, and you're just playing on their turf, right? So understanding that the market is just a game of probabilities, all it is a game of probabilities, and your goal as a trader is to stay in the long term. Your goal as a trader is to survive. And how do you survive? That's sticking to your train plan, right? Sticking to your train plan every day, being disciplined, right? If you're being disciplined outside of trading and inside of your trading, right, and you're showing up to the markets every single day, then you're more likely to stick to your trading plan and be disciplined as a trader, right? If you come to the market prepared, right, you prepare yourself as you're coming to a market, right, you're more likely to stick to your trading plan compared to the trader who wakes up tired, um, hasn't done anything, hasn't been productive, and just heads straight to the markets, ready to just ready to spend money. Like you're gonna be way ahead of that trader because you came to the market prepared with a game plan and you followed those rules, and you came with your rules that you're ready to follow, right? So it's understanding that it's a game of probabilities, and when you do take a loss, understand that you're meant to lose, right? If you come into the market understanding that you're going to lose, would you care if you lost? If you come to a market understanding that I'm going to lose today because the market makers, smart money, they want me to lose today, right? If and then you lose, oh, that's just, smart money, winning today, right? Like they want me to lose. But then when you win, right, it feels good when you win, right? But then when you lose, you remove that feeling of, oh my gosh, I just took a loss, right? When you lose, it's more so like, okay, I lost. So what? I'll come back tomorrow. But then when you win, it's like, okay, I did something good today. I need to do more of that. And that's how you need to be, right? When you win, you need to understand I did something good today and I do need to do more of it. And when you lose, it's understanding, okay, I lost. It's part of the game. How can I learn from this? Was it a mistake on my end, or was it a technical mistake that I could have done better at? And that's where you improve as a trader, and that's truly where your journey begins. That's truly where your journey begins when you actually start to reflect on your trading and you actually start to learn where you're messing up as a trader from a mental and a psychological state as well as a technical state, because there's technical mistakes that you can make. Like when I talked about the adjusting my stop loss, that's a technical mistake. You don't want to have the same stop loss every single time because you have to adjust for the market conditions. That's a technical mistake that I've made in the past that I've overcome. A mental mistake was like today, where I had this short opportunity. Let me see if I can show it here. Where I had this short opportunity, and instead of sticking to my stop loss, right, leaving my stop loss, I seen price action come up against me, and I took the trade off early out of fear instead of just leaving my stop loss where it was at. That's a mental mistake. I've learned from it, and now I've overcome it. And when coming into the market today, tomorrow and next week and next month, I've learned from that loss, and going forward, I will improve as a trader, right? And that's where your journey as a trader begins, is when you can start to understand where you're losing as a trader. And this is why it's important that I do these post market analysis, right? So we can look over the markets as a whole. Like this is more than for me, right? This is for you guys as well. We look at over the markets, how could we have improved as traders today? Because this is a community of traders looking to become the best traders they can be. We're not here looking to become average, right? This isn't a signal service where you're just here to take signals and win and make money. No, like this is a channel where you have a goal of becoming a great trader and making a living off of trading and feeding your family with trading and living life to the fullest through trading. But how can you become that, right? You become that by becoming the best version that you can be, right? And consistently showing up every single day, learning how you can become better. You have to be obsessed with learning how you can become better, right? That's the only way you can grow as a trader, is continually to look at where you can become better, continuing to learn, continuing to be a student. You will never truly master. You will never truly master the markets, but you will reach a level in your trading journey where you will eventually master yourself. Right? That ICT says that all the time, right? You'll never master markets because the house is rigged to beat you every single time. But you will reach a point to where you master yourself, to where if the house does beat you, it's it, it's like a drop in the bucket compared to how badly you're gonna beat them. That's why people say psychology is so important. Psychology is your superpower in trading. That is your superpower in trading. Your setup and how you trade is simply just the entry, right? It's simply just the entry and exit. Psychology is your superpower. And once you can truly master your psychology through constant repetition, constantly showing up, constantly being disciplined, that's where you will see the best results as a trader. So let's go on over today's trade and psychology lesson there. Uh, the I mean, we went lower today. Yeah. We went lower. It was pretty choppy overall. Pretty choppy overall. But we're talking about how the dollar coming into daily time frame. We were talking about how we wanted to see the dollar reach up into this bearish fair value gap, and we have done so perfectly. Remember that when we talked about in the pre-market how we wanted to see the dollar push higher and reach up into this bearish fair value gap. So we've done that, and now it's seeing where does the dollar move from here. Right now it's seeing where does it move from here. Right, either it could push above this fair value gap and act as an inversion to then continue going higher, or it can find resistance here and overall continue to see the push to the downside. Right, so that's what we're looking at here for the dollar, and we're talking about how even though long term uh we we were bullish on the overall forex EU and GU long term, but as of now, unless the dollar can see some type of rejection from this bearish fair value gap here and push lower, then we are looking for shorts here, and we could possibly see EU coming down into this order block as well as GU coming down to this order block level. So, right, and when we talked about this morning, right, even though we are long-term bullish here for the EU and GU, as of now, the dollar has been going higher, and until we can really see how the dollar reacts at this bearish value gap, which what we want to see is overall the dollar reject this and push lower. That's what we want to see. But at the um, same time anything can happen, right? It can obviously break above here and inverse and continue going higher. So, right, just seeing how the dollar reacts at this level is super important. And let's get rid of all this. And yeah, we did have an outside day today, and we did come lower, tapping into this order block level. So yeah, so that's gonna be it for the post market analysis. See you guys next.